So this is what I was telling you about the other day. Ben Bernanke now suggesting it might be a good idea to just let the Fed's balance sheet stay where it's at. Don't worry about winding it down. As a matter of fact, if it needs to grow more, let it grow more. This will actually be beneficial. Just add trillions to it. It's already at $4.5 trillion. Just add more to it. Don't sweat it. Fed's new normal balance sheet could be huge. A bigger Fed balance sheet may mean better long-term interest rates. It might mean. But if it's wrong, it could mean higher inflation and higher rates. The Fed has yet to announce a plan to run off its $4.5 trillion balance sheet. While Federal Reserve officials have said they plan to begin a process to normalize their balance sheet, the end result is likely to be a balance sheet that's anything but normal. Interviews with Fed officials and public statements they've made suggest the Fed's new normalized balance sheet could end up being 3 times as large as it was before the financial crisis. And it could be bigger than that. Well, it already is. It was around $500 trillion or so before that, before the crisis. 3 times that would only be $1.5 trillion. It's $4.5 trillion now. And again, the Fed has not even announced a plan yet on how, other than we were going to do it later this year, but we thought maybe later 2018, but actually I think maybe around January 2018 we'll start unwinding. We'll start unwinding the quantitative easing, the balance sheet that we created through quantitative easing. But they didn't say how, and I've already done a couple of videos asking, well, exactly how. Someone please explain specifically how they would. I saw how they could do it, but I didn't hear anybody from the Fed or the government actually say, here's how we would do it. They're expecting this process to begin January 2018, many months sooner than previously forecast. Some Fed officials have made no secret of their intentions to announce a plan later this year to reduce the balance sheet. That plan could include a target for the new normal level. Yeah, and you know what the new normal level is going to be? Probably $10 trillion. Our balance sheet, we'll just keep it at $10 trillion. So again, in order for the Fed to have this trillions of dollars on its quote-unquote balance sheet, that means they had to create this money, give it to the banks. Banks give us the assets. That's really what's on the balance sheet. So what does that mean? How does, if the banks sell all the crap to the Federal Reserve, and they buy up all this garbage, mortgage-backed securities, which is nothing more than a package of mortgages. Lindsey, did he not say it or not? He was told years ago by his elite friend, Lindsey Williams, you're going to be making your mortgage payment to the Fed. The Fed's going to own your mortgage. You are going to be paying the Fed. That's what he said. And that's what this is when they have a balance sheet. Because almost $2 trillion of it, they say, is mortgage related. The other part are bonds and other crap. But, you get a little thing, we are Bank of America, LLC Home Servicing Loans. We are the servicer of your note to note holder. I used to get those letters. Note holder. Who's the note holder? We can't tell you that, sir. You'd have to sue us to find that out. Really? Interesting. Maybe somebody will. And maybe you'll find that, the Federal Reserve holds it. But you know what would happen during the lawsuit? I'll tell you right now exactly what would happen. You'll get a little letter. We are Bank of America, LLC. Here's your new servicer, this person. They now service the loan. And they'll play hot potato with the loan. The Fed will sell it back to another bank temporarily so that the lawsuit matches up. Yep. Or, we request for documents and stuff. Who owns the note? Oh, it's XYZ Mortgage Company. Who? Never even heard of them. Yeah, that's who they are. Okay. So that's who the note holder is. Yep, that's who the note holder is. And then when it's done, they'll get right back to the Fed, give us our money back. That's how that goes. That's how they do it. But how the hell are they going to get rid of their balance sheet? They can't sell the trash back to the banks. The banks don't want it. Why? Because it's trash. When I pull up Zillow and I show you massive, unbelievable amounts of little blue dots all over the screen, They signify the foreclosures and auctions. And they are everywhere, in every major city and state in the entire country. They are out of control. Those aren't the ones on the Fed's balance sheet, are they? Fed has to get rid of those too? The banks have enough they want to get rid of. They don't want more. Oh, we'll buy back the garbage we sold you. Well, yeah, that sounds good. No. No, my friends, no. The balance sheet refers to the portfolio of securities, in large part various types of treasury debt and mortgage-backed securities that the Fed, has purchased. The reduction most likely will come not from selling bonds, but by allowing securities that mature to simply roll off. Again, that's what I was told the last time. The Fed currently reinvests the proceeds, a process that will end during the balance sheet runoff. What central bank officials have not agreed to is at what pace they will downsize and what size they will consider appropriate. And again, and who's going to buy the crap from you? JP Morgan said it earlier. Just days ago, I mentioned it on the video. By December, there's going to be essentially a liquidity deposit problem at banks. You medium-sized banks and small banks, you need to start merging now because you're going to have cash flow problems by the end of the year. Oh, I bet they can be the ones who go out and buy this trash from the Fed. Speaking of the end of the year, they said by December. Well, next month is January. That's when they said they're going to unwind starting January. I bet these banks will have tons of cash all of a sudden. Which is why JP Morgan's telling them to merge now because they're not going to have enough cash. This is very confusing, isn't it? In an effort to stimulate the economy in the aftermath of the Great Recession, the Fed cut its benchmark interest rate to zero and began buying up government and mortgage-backed securities to drive down interest rates further. The Fed stopped adding to its balance sheet in 2014, and it now stands at more than $4.5 trillion, compared with around $850 billion before the crisis. Well, I got news for you. It was lower than $850 billion, depending on just how much past or previous to the crisis we're talking. A few months, maybe it was $850 billion. Year before, 2 years, no, it wasn't $850 billion. I remember looking, and it was like $550, $600 billion, somewhere around there. Not that it matters. $850 billion turning into $4.5 trillion is a pretty big jump. But because the economy has grown and the financial world has changed so much since then, officials say there is no going back to the old level. Notice how they worded that. But because the economy has grown, it has. I sure as hell can't tell by the GDP and the $10 trillion we have on our debt, national debt, from when it was $9.7 trillion right before Barack was walking in the office. I'm not sure how you grew the economy with that, but okay. But because the economy has grown, and here's the best part, and the financial world has changed so much since then. Wait a minute. Whoa. It has? Last I checked, it hasn't at all. The big banks are still laundering money. The big banks are still rigging the interest rates. LIBOR, they've admitted it. Deutsche Bank, they've rigged the silver markets, the gold markets, which we said they were doing then. It's been proven. But now they've admitted to it. And when you look at the time frame, they've admitted to it. Oh, that's these days. That's nowadays. You're still doing it. You still give out liar loans, taking liar loans, give you a personal mortgage. Liar loan being, I made up everything on the loan just to get approved. None of it's true. I'm going to be defaulting in the near future. Liar loan. They continued that. Car loans, everyone's approved. Just sign here again. Same thing, liar loan. Just say you make this money, we'll give you the car. Okay, boom. Nothing has changed. So what in the hell is it? But because the economy has grown and the financial world has changed so much since then. Now let me read it how it's supposed to be. But because the economy sucks, has not grown, and the financial world has not changed one bit, and there's a ton more debt, officials say there is no going back to the old level. Now that's the truth. And officials say no going back to the old level is also the truth. Because it goes hand in hand with that. Reasons A and B I just gave you is why it can't go back to the old level. Because if it does, that means they're going to have to sell that trash off, and there's going to have to be a bunch of banks buying it up. And the banks are not going to be in any kind of position, not even close, to saying, let's just buy that crap back from the Fed. Again, just go look at the massive foreclosures that are all over the country. Matter of fact, see my last video if you want. Just got to talk about that a bit there. More likely, these officials say, the Fed will aim for a balance sheet of about $2.5 trillion, or a reduction over several years of about $2 trillion. Right. Sure. Dream about it. A bigger Fed balance sheet on a more permanent basis is potentially good news for long-term interest rates. Oh, it is? Really? It means the Fed will have fewer bonds to unload, and so exert less upward pressure on interest rates. But if the Fed's calculations are wrong, it could mean higher inflation and higher rates. If they're wrong, if the Fed's calculations are wrong, this is the same Fed that doesn't calculate food costs, energy costs, gasoline, oil in any of their data to determine where rates should be, where inflation targets are. We don't include any of that. So what you're telling me is the Fed's calculations, which are complete nonsense, made up, like shake a magic 8-ball and have it tell you something. Give it an answer. That's the Fed's calculation. We're going to have inflation and higher rates, apparently. The biggest reason why there's no going back to the old balance sheet is currency. For a variety of reasons. I guess they're not going to want to get into them, but a variety of reasons. The amount of currency in circulation has grown 7% a year on average over the past 5 years, or 3 percentage points faster than in the 5 years before the crisis. People are simply expressing a desire to hold more cash. Ironic in a financial world that is growing more digital, and the central bank's job is to simply meet that desire for cash passively. About $1.5 trillion of cash is currently in circulation, and if current growth rates continue, that level will be north of $2 trillion in the next 5 years, providing a floor for just how small the balance sheet can get. Oh, really? Other factors will combine to keep it large. Unlike before the crisis, the Treasury now keeps most of its money on account at the Fed. At the end of 2007, the Treasury kept just $4.5 billion at the Fed. By the end of 2016, they have kept $374 billion at the Fed. Most banking experts think this is a good idea. I bet you bankers do. Commercial banks, which use to service the Treasury's general account, are now subject to capital and liquidity requirements that make holding the Treasury account too costly. The Fed doesn't have to follow those rules, of course. So here we go. We'll get down to the meat and potatoes of all this. Some economists have suggested a major reason for the financial panic in 2008, or at least one that made it substantially worse, was a lack of high-quality assets in the banking system. Now that's the truth, which is why the Fed bought up all the trash and didn't actually get all of it. There's plenty of trash on the bank's balance sheets now. Why? Because they do the same things they always do. Liar loans, ninja loans, just everybody's approved. We need to just keep this thing flowing. Doesn't matter. So a large Fed balance sheet providing a place where banks can secure high quality assets to park their money overnight can help provide financial stability. Oh, so it's a good idea to have a high balance sheet. Okay, got it. And here we go. Former Fed Chairman Ben Bernanke, the Ben Bernanke, if you will, wrote in a recent blog post, there are reasonable arguments for keeping the Fed's balance sheet large indefinitely, including improving the transmission of monetary policy to money markets, increasing the supply of safe short-term assets available to market participants, and improving the central bank's ability to provide liquidity during a crisis. Well, hold on. Why would don't be throwing the crisis word around. You fixed the crisis. There's not going to be any more crises. There's not. You fixed it in 2008, Ben. 2009. You guys fixed this. There will not be another crisis because you guys you have all these tools in your toolbox. As you used to always say, we've got tools in our toolbox. I guess you don't have any more tools because you're saying there will be another crisis and we need a huge balance sheet to deal with it. And maybe you're just saying that because the real reason is you can never unload the balance sheet. You can never, ever, ever unload it, and you know it. So it will just keep growing higher, bigger, higher, bigger, higher, bigger, just like the national debt. That's going to be kicking that can down the road. We're going to keep kicking that baby. And now the Federal Reserve has its own national debt, if you will, of its own kind of a thing. It's called its balance sheet. And it will just keep kicking that baby. 5 trillion, 4.5 trillion, 6 trillion, 8 trillion, 10 trillion, 50, and this will be a great idea. But again, my question is, well, hold on. When you increase that balance sheet, somebody's getting that money. And it ain't me. And it ain't my fellow citizens. It's the big banks offloading more trash to you. That's their way of dealing with the banks. Instead of telling the banks, you guys are all insolvent, you need to be completely broken apart, much smaller. You can no longer be an investment bank / regular bank, commercial bank, whatever. You can't do this anymore. We're breaking you apart. Nope. We want to keep that gravy train because all of our CEOs make unbelievable amounts of money. Our shareholders make good money, and we want to keep that going. And the only way we can keep it going is to run an insolvent bank and gamble on Wall Street, lose, we get bailed out, when we keep the profits. And that's the way we like it, okay? So Ben Bernanke, he added also, it's not unreasonable to argue that the optimal size of the Fed's balance sheet is currently greater than $2.5 trillion and may reach $4 trillion or more over the next decade. Opponents of a large balance sheet say the Fed should reduce it as much as possible so it doesn't become a victim of politics, where Congress or the executive branch could mandate that the balance sheet be used to buy certain types of securities to solve fiscal problems, kind of like what they're doing now, right? They also worry that such a large balance sheet is potentially inflationary. More than $400 billion of just Treasury debt is scheduled to mature next year, and maybe as much as $200 billion in mortgage-backed securities could be paid off. So a decision this year to simply halt all reinvestment could mean the balance sheet takes a major step toward the new normal in just a single year. Yeah, and again, what's the new normal going to be? Massive, unprecedented high, precedentedly, I don't know if I can say that, whatever, high balance sheet. Massively high balance sheet on the Fed. Like the national debt will increase. 22 trillion national debt, 25 trillion national debt, 7 trillion, 8 trillion, 10 trillion Fed balance sheet. And again, none of this goes to you and me. We get thrown out of our houses. We then go pay somebody extremely high rent because there's fraud and corruption in the appraisal thing with housing and these other groups that appraise houses for the rental companies. They praise them so good. The rental companies love them because they get to charge higher rents. Everybody's happy except for you, the schmuck taxpayer, who's paying $1,700, $1,800 a month on something that shouldn't be more than $1,200 to $1,300. But everywhere around the neighborhood says the same thing, so it must be right. Well, that's funny. There's millions and millions of foreclosures all over the place, and they all are asking outrageously high prices. But again, as I showed you in my last video, the actual selling price is significantly lower than the listed price. And when you look at the foreclosures' actual sold price, they too are below even the average price of what that house should have sold for. So what's going on here? What's going on is a whole bunch of people are lying. And everybody must lie to the next guy and extract as much wealth out of the next guy as humanly possible just to keep this so-called system going. Another day, another week, another month. That's all it's about. Take care.